Hi team, Uwe Jacobs, property investment analyst, strategist. Look guys, I'm on my happy place on the beaches of the world. Nah, it's just the background. That's okay. I'm getting better at this stuff, so that's all good. All right, 4 topics for today. The first one is our properties prices going berserk. The second one is where's the best area to invest. The third one, I want to give my view on the world on the first 2 months of property investing on the property market in Australia. And last but not least, a couple of comments on the RBA rate. So let's hop right into it. Are the property investment markets going berserk? Yes, love it. It's definitely all happening. And I have to admit, I laugh at the experts that were forecasting the sky is falling down. Harry Aston, property prices are going to slump in Australia by 40%. There were even banks that predicted worst case scenarios of 40% price slump. Bullocks. Look at the facts. Look at the figures. Don't get into the rut of the lemmings that are running towards the cliff. When we look at the figures and at the facts, we find out that in February, the prices for Melbourne median property went up in the month of February alone by 2.5%. In Hobart, the prices for the median property went up in the month of February alone by 2.5%. In Sydney, the prices went up for the median property by 3%. Australia-wide, the prices for median property went up by 2.1%. Now, what's really, really interesting is, which is very, very unusual in my books, all capital cities went up. That's not virtually unheard of. Normally, you have some capital cities that increase, but some fluctuate or even may go down a little bit. Every capital city in Australia has gone up in February. Yes, I think we're in for a great run for property investment. Now, I'm a simple bloke. I have a simple theory for that. And yes, it is only a theory. My theory is the COVID times, due to various factors that I won't go into now. I want to keep this under 35 minutes. Just kidding. The COVID impact wasn't as bad as was anticipated. The economy is recovering much faster than was expected as well. And on top of that, in my humble and simple opinion, people couldn't spend the money that they were normally spending. There was no travel overseas. For a lot of us, especially in Victoria, there was no travel interstate. The money flow kept reasonably flowing. So from where I'm sitting, people have got money to spend, and that's burning holes in their pocket. On top of that, what COVID did is it focused and refocused everybody on what's essential. Now, essential is our Maslow's hierarchy second need for shelter, and people woke up that that is a very safe investment. So that is further driving the property investment market, in my view. Now, where's the best area to invest? Well, heck, I do declare unbiased. I love the country areas. Now, why is that so? The reason is that the rental yields are simply higher. I ain't gonna do the negative gear or what I call feed the dragon game. If you want to play that game and get 32 cents back for $1 invested, hey, give me the money. Whenever you want to play that game, whatever money you want to throw at me, give me $1, I give you 32 cents back. When you look at it, it doesn't make sense. Why would I hang a millstone around my neck and do a negative gear? In all capital cities, when you look at the median rental yield, it is lower than what the property costs to run. So I'd rather go in a country area where the property pays for itself under 100% calculatory interest, with all costs included. Now, if I have to sit out a time where there is no growth, as for example we had in Sydney, 7 years no growth. Can you imagine having to sit there for 7 years, paying $500, $1,000 per month of your after-tax income? I ain't doing that. That's not risk-averse investing, and I'm into risk-averse investing. So, you know, my strong suggestion is the country areas. And there are excellent areas around to invest in for a number of reasons. Far North Queensland, Cairns, Townsville, Bowen, Mackay, pick whatever you want. They have been depressed. Now, what does Warren Buffett say? When others are fearful, be greedy. In there lies the opportunity. Now with the builder's grant, just about every available piece of land has been snapped out. There is huge pressure in the market. And again, I suggest look at the fundamentals. Look up SQM, have a bit of fun. Look up SQM, Far North Queensland. February rental vacancy rate is 0.1%. Median prices are going up everywhere. The builder supply pipeline cannot be extended. They cannot put through anymore because that pipeline has somewhat diminished as well during COVID. A number of builders exited the market. But the demand is far exceeding the supply. As we can see, prices are going up in the building and as well in the land. So anybody who's been clever enough to secure some land is on a winner. Now, it's not too late to do it. I mean, we've got a number of pieces of land stitched away for us, and that's a lot of fun. But the opportunities are out there. Now, the other thing with the country areas is, forgive me for saying it so, the number of people that are sophisticated investors in the country areas is lesser, simply by the number of people in the area. We've stitched out a deal again in Hobart, where with some intelligent, and heck, it only took me 20 years to become an overnight success, we can make extended use out of one block. I reckon we can fit two houses on one block where every normal Joe Blow, including the real estate agents, are thinking it can only fit one block. There's an easement there. Well, with the right knowledge and the right tools and the right advisors, you can circumvent these things, mitigate them, and potentially in future, extend the use of the land. This is what I call manufactured capital gain. That's a lot of fun. I love doing that. So yeah, my suggestion is the best areas are the country areas. Now, personally, we are playing very well in Cairns, Townsville. We're doing things in Hobart, continue to do things in Hobart, which is great fun. As soon as I can get into Western Australia, we've got 4 houses that we're about to start in Geraldton again. And I want to have another look at the Perth market, although I think that's already going a bit hot. Anyway, so reflections and summary for the first 2 months. The market is going excellent. There is no question in my mind about that. And I'm going to lean out of the window to give you a German saying. I'm going to be bold. I'll make a prediction that we'll get to in excess of 6% this year in Australia, in the median price. You can't do that. Wait and see. Those that are doing it shall not stand in the way of those that say, no, the other way around. Those that say it can't be done shall not stand in the way of those that are doing it. You know what I mean. You're used to my English. Well, good. So yeah, I think the signs are set for a great year in 2021, which we can do with because 2020 was a write-off. Anyway, be that as it may. Quickly, and I'm already at the 10-minute mark, so I'll finish this off. The RBA has, as expected, left the rate at 0.1%. I have to laugh. I'm no expert, but I have my own bets running internally, and for 3 months, I have won the bet against the experts. As per yesterday, 67% of the RBA rate tracker were still forecasting a reduction to 0%. That ain't gonna happen. My personal view, hey, again, just my personal and private view, we're gonna be sitting on 0.1%, certainly for the rest of 2021. Some people are arguing and suggesting the RBA will not change the interest rate until 2024. Don't know about that one. But 2021, definitely mid of 2022, let's see what happens. Certainly at the 0.1% and interest rates now under 2%, that's great times ahead. You've got to be in it to win it. Have a good month. And if you want to book a strategy call on the website all the way down, feel free to do that. Enjoy. Have fun.